Hello, Doctor, and my fellow classmates. Today, my group are going to present a comparative study of a Malaysian and a global bank's risk management policies and practices in cyber risk/security. So, this is our team members, which consists of me, Ahmad Zaman Mutakin, Ilman Haziq, Elinor Nabila, Jasmita, and Lau Zinziang. First of all, we'll be talking about the developments in cyber risk. It has always been around, but it truly escalated during the COVID-19 pandemic in 2020. The reliance on digital transformation had caused a heightened demand for digital banking services, as the norm at that time was to work from home. People weren't allowed to step out of their house, and hence they cannot do financial transactions through physical mediums. So banks had no options but to introduce more digital services to ensure continuous connectivity with customers. And as a result, there was an emergence of online threats. There was an increase in digital platforms, which only became a medium for cyber attacks. Various methods were done, such as phishing, malware, and distributed denial of service. The intent of such cyber attacks was due to geopolitical agenda, personal or collective enrichment, or discontent.
IMF estimates that the risk of extreme losses from cyber risk can reach as large as 2.5 billion US dollar, signaling that the stakes for banks are now higher. Fortunately, banks around the world is aware of their underspending in cybersecurity for the past 3 years based on the severe results. There has been an increase of 12% of respondents that thinks that they should have been spending more on cybersecurity, and only 31% is confident in their abilities to address cyber risks. Going forward, banks will be focusing on their so-called cyber expenditures as shown by another survey. Tier 2 banks are anticipated to spend the most over the next 2 to 3 years since they are approaching the Tier 1 capital requirement and expect more regulatory scrutiny. This spending also now evolves to more intangible assets, as engineers and data scientists are critical in developing intellectual property. It seems very likely that most banks will acquire graduates with a background in cybersecurity and to retain the right talent. Software solutions, including firewall and antivirus software, is also an option for the banks, as these software are intended to provide autopilot protections against phishing scams, malware, and data breaches. Banks can also purchase cyber insurance, but they are restricted in terms of availability and coverage. Another likelihood is that banks will reduce their dependencies on third-party IT providers, as relying too much will put the bank more at a disadvantage due to the risk of common shocks. A survey done shows that respondents are highlighting third-party security risks as the areas where improvements are required. This is important as it could pose threats to macro-financial stability through a loss of confidence, the disruption of critical services, and because of interconnectedness, as mentioned by IMF. Going forward, banks will likely diversify their IT supplies to lessen the impact of a single point of failure. Banks can also now choose to use open source technologies, which provides them more freedom and control over their technology, which can be scaled and tailored to meet their needs.
Moving on to the key regulatory requirements under Bank Negara Malaysia, there is a policy document called Risk Management in Technology. So under Section 11, there are 6 items for cybersecurity management. For cyber risk management, the bank should develop a cyber risk framework to manage the cyber risk, cyber resilience objectives, and also risk tolerance. Next, for cybersecurity operations, banks should establish clear responsibilities to mitigate measures based on the different phases of cyber attack lifecycle by conducting vulnerability assessments and also penetration testing. For data loss prevention, banks should establish a clear DLP strategy to secure customer information by designing robust internal control procedures and also appropriate technology. For cyber response and recovery, banks should establish and implement a comprehensive cyber incident response plan to address these preparedness in the financial institution. For distributed denial of service, banks should ensure that third-party service providers' technology are protected against these DDoS attacks by regularly assessing capability of provider. And last but not least, banks should also ensure SOC has adequate capabilities for proactive monitoring of technology. Moving on to the key regulatory requirements under banks for international settlements. So under a publication of BIS, Bank Cybersecurity, a second generation of regulatory approaches, there is a cybersecurity framework by CPMI IOSCO, and there are 5 items. First of all is identification, where banks should identify the threat profile, risk exposure, and also expected losses. In terms of protection, there should be an internal and third-party patches to ensure security and functionality of application environments. And for detection, there should be conducted by the bank an assessment of application security capabilities, periodic scans to check vulnerabilities, and also a stealth assessment of bank's digital infrastructure. For response, the bank should analyze incident response capabilities across predetermined threat scenarios and carry out dynamic simulations of threats to assess response readiness and effectiveness. Last but not least is recovery, where the bank should analyze stakeholders' preparedness and effectiveness of business continuity plan and initiation of action plans and mobilization of resources to tackle consequences.
In this session, I'll talk about Maybank Cyber Risk Framework. Maybank Cyber Risk Framework is established based on the standards issued by the National Institute of Standards and Technology and regulatory bodies. In January 2023, Maybank launched the Q Switch feature through M2U and MAE app by allowing customers to immediately deactivate their M2U access if they notice something peculiar. From June 2023, Secure to You becomes the default transaction authentication for all transactions on M2U and MAE apps. from October 2023, clients of first-time activations are required to make physical activations through Maybank's ATMs. And to enhance awareness, Maybank continues and constantly educate the public on scams and frauds. They utilize the LCD screens at their branches and ATM machines to display scam warnings. Besides, they also educate their board members through training and programs. During financial year of 2023, all board members attended trainings on cybersecurity program with 37.3 hours accumulated. With the initiative by Maybank, about 8.5k potential fraud cases were prevented in 2023. This leads to the question, is Maybank's cybersecurity framework performing good enough? Maybank is well prepared to handle ordinary cyber risks such as phishing and fraud. Tools like the Q-switch feature and secure to-you authentication will help to protect against these risks. However, there are still serious challenges, such as complex DDoS attacks and new types of malware. The complex DDoS attacks will create huge amount of traffic, which can cause even robust systems to fail and disrupt important online banking services. These could be solved by conducting a red team simulations to mimic a real-world attacks and collaborate with global cybersecurity experts. Maybank must continue to improve its capabilities to address these increasingly complex challenges.
HSBC framework, on the other hand, built of three pillars. The first is to prevent, detect, and mitigate, which highlight three important components, which is the 24/7 monitoring, proactive threat intelligence, and third-party risk management. The component highlight layered cybersecurity controls and around-the-clock security operation to detect and mitigate the threats effectively. And the bank has a dedicated team that analyze cyber threats as well. Policy and governance must focus on the robust policies on oversight, three lines of defense, and continuous assessments. All these three translated into HSBC, where they have a comprehensive policies, procedures, and control with clear responsibilities for every stakeholders. For cyber training and awareness, HSBC emphasized importance of having awareness among their employees to protect their customer data. They also make sure their developers are certified IT developers, with over 94% of them hold enhanced security certifications. They also have a lot of achievement in this field, but the most prominent one is when they are the first to introduce the quantum protection for AI-powered foreign agent trading. After understanding HSBC framework, let's analyze it if they are ready to face two key developments, which is unprecedented digital transformation and emergence of online threats. From the framework itself, we can see each one highlights the components that showcase their effort to face future development. Inside the prevent, detect, and mitigate, HSBC show their effort to grow their digital business through continuously invest in early-stage elite technology company like BUD, BioCatch, and CallSign through HSBC Corporate Venture. These companies will help them to grow their digital feature and continuously improve their tech. Therefore, based on this effort, we can see that HSBC is ready to face unprecedented digital transformation. From the other two frameworks, it outlines their effort in developing cutting-edge technology and proactive response plans. HSBC continuously tests its cybersecurity system against National Institute of Standards and Technology (NIST) to ensure their technology are ready to face any cyber threat. Their effort extends beyond technical side. They also provide training to their employee regarding awareness about cybersecurity threat and how to prevent it from happening. All this effort shows that HSBC emphasized on the importance of robust cybersecurity, cyber attack resilience, and social engineering awareness. Therefore, we can say that HSBC is ready to face the emergence of online threats.
I will be presenting a comparison between Maybank, a leading Malaysian bank, and HSBC, a globally renowned financial institution. The comparison focuses on their approaches to digital transformation and cybersecurity. Let's begin with digital transformation. Both Maybank and HSBC accelerated their digital banking initiative during the 2019 COVID pandemic to ensure continuous connectivity with their customers. Maybank focused on enhancing local services throughout apps like Maybank to You and the MEE app, tailoring solutions to Malaysian customers. Meanwhile, HSBC expanded its digital capabilities globally, aiming to improve customer experience and operational efficiency on a larger scale. Moving on to cybersecurity measure, Maybank introduced practical tools like Kill Switch, allowing customers to deactivate accounts if suspicious activity is detected. Secure to You was implemented for transaction authentication, requiring physical activation via ATMs. Public education campaigns also play a key role in their strategy. In contrast, HSBC relies heavily on advanced AI-driven tools to detect and mitigate sophisticated threats, including ransomware and global fraud risk. Their approach reflects their larger international footprint. Moving on to AI in cybersecurity, it's a critical focus for HSBC, where they actively integrate AI technologies to counteract evolving threats. For Maybank, AI-driven cybersecurity wasn't explicitly mentioned in their framework, but they have adopted other innovative measures to ensure security. Next is governance and training. Maybank invests in board-level education with 37.3 hours of cybersecurity training conducted in financial year 2023. HSBC has integrated cybersecurity into enterprise risk management and offers regular training programs for employees globally, ensuring alignment with their extensive risk mitigation strategies.